All right, here's episode 2. Thanks everyone that tuned into the first episode, titled "The Bitcoin Thesis." I don't know if this is. I don't think that's the title for the show. The show was originally, I was thinking Dylan LeClaire Live, but here I am pre-recording episodes, so I don't really have a name for the show. But this one, episode 2, I'll call the biggest story in corporate finance. So maybe that's a giveaway for people familiar here. But I guess, I'm thinking the first 10, 12 episodes of this YouTube channel, and also I'm posting this to X. If you're watching on X, by the way, please shoot a sub over to the YouTube channel. I'll link it below. If you're watching on YouTube, please give this a like and a sub. I really appreciate it. I imagine my current audience is very much Bitcoiners and people following me from Twitter, but the goal is to reach more a larger audience. So with that in mind, the first 10, 12 episodes of this show will be basically kind of outlining my bigger ideas, my broader theses on kind of how I view the world, how I think about things, and then after that, after we get a lot of the core ideas out of the way, we'll kind of go more into daily or kind of the weekly news, kind of what's happening in the market current day. But this is kind of more broader themes here. So with that being said, let's dive in here. First off, I guess hold up before we dive in here. Inspired by my good friends Marty Bent and Matt Odell and their long-standing podcast Tales from the Crypt, which is great, by the way. Everyone should go watch it. We're going to start the episodes with going over the block height and some of the Bitcoin stats. So current Bitcoin price 70,000, ripping today after kind of touching the low 60s over the weekend. Monday on Wall Street, I haven't even looked at what the stock market's doing. Don't really care. But block height, what are we looking at? We are at block height 836,261. At 840,000, there is the Bitcoin halving, which I'm sure most everyone's familiar with, but we'll go over that in a later episode if not. Today, as I said, we're going to be covering the biggest story in corporate finance. And before we do that, I think I'm just going to kind of outline some bigger ideas here. And the first would be the idea of a speculative attack. So this is a term in finance that this has existed for decades. Famously, the most famous story of a speculative attack is George Soros breaking the Bank of England. So let me explain. A speculative attack is essentially when a speculator, a financial market participant, borrows in one currency to buy another. For instance, for example, George Soros in the 90s, the Bank of England, kind of in an effort to the European Union, before the euro was fully introduced, they had an exchange rate mechanism where currencies were pegged to the German mark, and the UK joined, and because of the strength of the mark, there was a lot of trouble. And so, long story short, George Soros, seeing these troubles and seeing how the interest rate hikes that the Bank of England conducted weren't effective, borrowed a bunch of pounds, sold them on the market for, I believe, German marks and US dollars, and the currency crashed, right? Because when you borrow a currency, money is lent into circulation. So he borrowed billions of pounds, sold them on the market, the exchange rate tanked. It actually broke the peg, the exchange rate mechanism. The currency collapsed, and then he sold all the dollars and pounds that he got by short selling the marks, and bought back the pounds for a profit and made like $1 billion. And this is $1 billion in 1990, so right, this is a massive trade. And so for those that are curious and want to learn more about what a speculative attack is, I really encourage everybody to go read an article by Pierre Richard written in 2014 called Speculative Attack. So if you are first, if you haven't read this, I strongly encourage you to do so. Look up the Satoshi Nakamoto Institute Speculative Attack by Pierre Richard. This was written in 2014, by the way. And essentially, I think there's a few core concepts that I want to cover here. And again, this is a fantastic article. But here's a quote I love, right? On the liability side of a Bitcoiner's balance sheet, there are mortgages, student loans, car loans, credit cards, etc. Everyone admonishes people to not borrow in order to buy bitcoins. The reality is that money is fungible. If you buy Bitcoin instead of paying your mortgage principal, you are a leveraged Bitcoin investor. Almost everyone is a leveraged Bitcoin investor because it makes economic sense within reason. The cost of borrowing, the annualized interest rates ranging from 0 to 25%, is lower than expected returns of owning Bitcoins. So, for instance, right, if I have, say, student loans or a mortgage or whatever dollar liability, and I buy Bitcoin, right, I have dollar liabilities on my balance sheet. I have Bitcoin assets, right? So I didn't directly borrow money to buy Bitcoin, but I chose to not pay down a dollar liability to stack a Bitcoin asset, right? That's a really core concept. So getting to this, I think I'm going to cover the biggest idea in corporate finance, which is MicroStrategy, of course. So just to rewind here, in 2020, MicroStrategy, Michael Saylor comes out following COVID, following the trillions of money printing. And this company is $1 billion company with $500 million of cash, which is about 10 years approximately of accumulated net income, right? So MicroStrategy, this is a small software company, right? I say small as in public markets, right? Like the MicroStrategy is competing with Microsoft, right? For business intelligence software, which is, Microsoft is a giant, right? MicroStrategy was one of the big winners and massive losers of the tech bubble boom and subsequent bust. Stock fell 99%, and they chugged on, right? Michael Saylor at the helm literally survived the 99.9% drawdown in the stock price, stayed a CEO, and kept chugging along. And the stock recovered, but never came close to where it traded in the dot-com boom. So let's fast forward a bit. We're in 2020. Again, trillions of dollars of money printing. And on August 11th, 2020 MicroStrategy announces that they have adopted a corporate Bitcoin strategy. So Bitcoin is now the treasury reserve asset, right? So here's some proof of work, a Robinhood screenshot, a lowly pleb on Robinhood. But August 11th, 2020, right? Wall Street's been put on notice. Bitcoin is the new stock buyback, right? MicroStrategy is trading at the time of my screenshot. This is literally eight minutes after trading. I posted this the day that MicroStrategy announced this publicly. MicroStrategy's at $144 a share, up 16%. And so they, I think, originally just bought $250 million of Bitcoin, or maybe it was a couple hundred million. I'm not exactly sure. But this kickstarted it off, right? And so now let's fast forward. Here's another one, September 15th, and I'm posting my tweets not to say I told you so, or be like, hey, look what I said. More so to kind of go through my timeline or my thought process as it evolved around MicroStrategy, around Bitcoin adoption, and particularly from a corporate level, right? Because Bitcoin adoption is happening at an individual level. We're all, many people are buying Bitcoin. It's happening somewhat at the institutional level, or some, crypto Bitcoin focused firms. But at the corporate level, MicroStrategy was and still is the biggest story. And I don't think anybody in the traditional financial world that's not kind of tuned into what's happening with Bitcoin is aware of this, and they should be. So again, September 15th, MicroStrategy up 18% since announcing they started holding Bitcoin. Every Fortune 500 CEO and CFO has been put on notice, right? And accumulate Bitcoin at all costs for a little bit of extra flair there. And so here's, again, this is not about MicroStrategy, but more about the idea of a speculative attack, right? How to get rich. I posted this in October 20th, 2020. Personal balance sheet, assets, Bitcoin, liabilities, dollars. So this is not to say go borrow as much money as you can and buy Bitcoin, or collateralize your Bitcoin, or leverage long Bitcoin futures, right? I'm not saying that at all. I'm not. But more so, right? For instance, the people that have a 30-year or 25 years left on their mortgage at 2%, at 3%, right? You're borrowing money at 3%, right? And currently, 30-year yields on U.S. Treasuries are above that, or like 4 and change, 5%, somewhere along those lines, right? So the real important thing to understand is if you have an interest rate that's at or below the level of inflation, or if you want to think of inflation as the CPI inflation rate, or you want to think of inflation as the expansion of the money supply, either or, right? For instance, like what's the S&P 500 compound annual growth rate over the last decade? Is that your hurdle rate, or is it the Fed funds rate? It's up to you. Or is it the 10-year yield? Up to you, right? But more so, I think it's really important to understand that the last 40 years have been characterized in financial markets, really last 45, since interest rates topped in the 80s, early 80s, have been categorized by lower and lower real interest rates, right? Meaning that at around kind of the turn of the century, the 2000s, interest rates were below the level of inflation, right? Meaning, or kind of hovering around. And really, maybe you call it the Great Financial Crisis after we started 0%, ZIRP, zero interest rate policy. Inflation's 2%, interest rates are 0. What's the real interest rate? Is it? Well, it's negative, right? So, what's your economic calculation look like when real interest rates are negative, right? When you borrow money for not zero cost, but for negative costs in real terms, right? This is why you see a lot of companies like Apple, right? Despite having tens of billions, hundreds of billions of dollars of cash on its balance sheet, Apple is borrowing money in the corporate bond market and buying back their stock, right? So why is Apple borrowing money for 20 years when they're making money hand over fist and have zero liquidity problems? Because Apple borrows at a rate that's basically what the U.S. government borrows at. Maybe even better, right? Apple has a better Apple's credit was trading actually better than the U.S. for some time, right? Meaning like there's no way that they default. So the cost of capital is so cheap for a company like Apple that they are going to borrow money because they know that the cost of capital is very, 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 very cheap, right? So that's just an important thing to understand, is that the last 20 years, right? Maybe 25, but the last 20 years, the meta of the stock market, the U.S. stock market in particular, especially post-Great Financial Crisis when interest rates were lowered to 0 and money, they were buying trillions of dollars and, doing trillions of dollars of quantitative easing, buying bonds and putting it on the Fed balance sheet to stimulate markets, was that all of, basically every company that was profitable or could do so would borrow money and buy back their stock, right? So you're borrowing money, you're adding debt, you're adding leverage to the balance sheet, and then you're just buying back your shares. The money goes poof, right? But it reduces the shares outstanding. The stock price, in theory, goes up, right? And so management gets rich, the C-suite gets rich, anyone with stock options gets rich, right? That's the incentive structure. There's also, that this works for an Apple, right? A dominant monopoly. Apple's shares have continued to go lower and lower and lower, meaning that each share you owns a greater and greater percent of the company, right? So great strategy for a company like Apple. On the other side of the spectrum, there's companies like IBM, right? IBM has executed more, right? Very much over indebted. I don't know the numbers off the top of my head. But has IBM, up to their eyeballs in debt, has spent more money buying back their stock than the current market cap of the business, right? So they've spent more money just buying their own shares than the current value of the business, right? So that's malinvestment, classic case. So going back to the first tweet I posted, right? Bitcoin is a new stock buyback. What does that mean? Maybe that's hyperbolic, this overzealous Bitcoin bull. What do I mean? Bitcoin is a new stock buyback. Well, what I think Saylor did, and no one realizes this yet, by buying Bitcoin, right? Because they could have bought 500 million in shares, right? The 10 years of accumulated income, they could have said, hey, we're just going to buy back our shares, right? But what is that? That would have just, one time, bonus in the stock price, and then what happens, right? Well, all of your liquidity is gone. Poof, disappeared, right? You have no liquidity. You have no flexibility to put cash to work. You have 10 years of accumulated savings that go, poof, gone, right? So I think that would have been a strategic error. Instead, they bought Bitcoin, right, at $10,000, $11,000, which was obviously a good decision at the time, which was controversial, but they didn't stop there. MicroStrategy did not stop there. So here's one of my tweets. Saylor says, and this is December 2020, MicroStrategy purchased another 2,500 Bitcoin for $50 million in cash. we now have approximately, they bought at an average price of $19,000 per Bitcoin. And people were making fun of Saylor for buying near the all-time high, right? The all-time high of 20,000 in 2020 and 2017. Saylor on the pump to the new all-time highs right before it was broken at $19,400 per Bitcoin. People are like, "You're buying the top. What are you doing? This is crazy," right? And we now hold approximately 40,000 Bitcoin. And I said, "Hey, Michael, when will MicroStrategy start borrowing at 0% and buy Bitcoin? Lever up and speculative attack the dollar." And so shortly after, MicroStrategy comes out with a convertible note offering. What is a convertible note? A convertible note is essentially a mix between a debt and an equity instrument. So convertible note, they I forget the exact details here, but they borrowed, I think, around $1 billion. I think due in 2027, 2028. I'm going to be off on some of the smaller details here, but they borrowed at 0%. Right, so they borrowed money due in 7 years, but they said the reason they borrowed money at 0 was they said, "Hey, bondholders, we'll give you the option to either give your money back, or you can convert to equity shares 40% higher at a higher price, 40% higher than where the stock's trading today." Right, meaning if the stock's, let's just for simple math say the stock's at $100, we'll give you can have shares of the business if it's over 140. Right, so there's a call option kind of embedded in this debt instrument. That's a convertible note. And again, apologies if I get some of the smaller minor details, like when they raised and whatnot. But this is at the turn of 2020 to 2021, right? The Bitcoin boom of 2021, the mania is just starting. And so shortly after, I think literally in the same month of when I said, "Hey, Mike, when are you going to start borrowing money to buy Bitcoin?" Right, which sounds super irrational, right? Crazy. And I say this as someone myself that in 2020, as I tweeted this, "Hey, assets, liabilities, dollar liabilities, Bitcoin assets, how to get rich." I had not 0% rates, but I had, liability. I acquired liabilities. I had added debt to my personal balance sheet to buy Bitcoin. And not, again, not financial advice. And I've since obviously paid that down because I don't have 7-year terms like a corporate does. So here's a cool moment for me. Saylor tweeting in March of 2021. Yes, this is after I think multiple debt instruments issued to buy Bitcoin, right? But again, here was some of the math, right? So this is June 2021. Said Saylor and MicroStrategy are raising another $400 million via secured debt offering. So they've already done a convertible note, right? They've bought a bunch of Bitcoin. I don't know exactly how much they had here, and I think they got $600 million here. I think it was oversubscribed, but again, smaller details off. I could have put a little bit more work into this before the video to prep and gotten the exact numbers, but just the broader point remains, right? They borrowed $400 million. I think it was $600, regardless. But the interest rate was 6.5%. It was a junk bond, quote unquote junk bond, right? The junk bond now, right? I mean, the interest rates went way up, so it was a great issue of debt. But do the math, right? Bitcoin is $36,000. With the interest expense in 2028, the break-even price for MicroStrategy is $55K. Bitcoin currently is trading at $70,000, and it's due in 2028, right? So again, and actually, let me backtrack. Current day, March 25th, 2024, the convertible notes issued at 0% by MicroStrategy at the turn of 2020 to 2021 are up 400% because they have that share optionality for the investors. So debt investors are different than equity investors. Equity investors want to make money. Debt investors don't want to lose money, right? So when you see a debt instrument at 0%, it makes you raise an eyebrow. It's like, whoa, right? But you have to understand they have that call option. So the fact that the convertible note has been, I don't know, I can't say it's been the best performing debt instrument because I don't have a Bloomberg terminal, but it's been one of the best corporate bond. It may be probably the best, but I can't speak on that. Corporate bond the performance in the corporate bond market out of literally any debt instrument, right? So anybody that bought it, right? I mean, you would have been better off just buying MicroStrategy itself, but as that debt instrument, I mean, that's an unbelievable performance since then. So again, and this is June 2021. I think MicroStrategy was like $500 at this point. And again, this subsequently crashed, right? So MicroStrategy hit 1,000 or so in 2021, crashed to $150, right? Back where it traded back before they acquired any Bitcoin, it traded back to that price, right? Full retrace, ton of volatility. They were underwater like a couple $2 billion, right? People said Sailor's going to get liquidated, right? Okay, say that. But I think here's the kind of the reflexive feedback loop, right? MicroStrategy issues debt, they buy Bitcoin. The Bitcoin increases against the value of their debt, the market cap increases. The market cap increases, their weighted indices increase, right? So MicroStrategy is technically now it's eligible for S&P 500 inclusion. I'm not an expert in that, but I think after a few profitable quarters, and particularly after the accounting rule changes, they will have a screaming case to be included in the S&P 500. I think they're like the 350th biggest company in the U.S. currently, so they definitely could be there. But MicroStrategy issues equity to buy Bitcoin. Bitcoin goes up, MicroStrategy market cap goes up, issue more equity, buy Bitcoin, repeat, right? And so we really saw the equity issuance tool utilized like crazy in 2023, right? So here's MicroStrategy's market cap. Again, the company was a 1.5, 1 billion, 1.2, something around that. I think $1 billion company before the Bitcoin announcement. It's a $30 billion market cap today, right? And look at the shares outstanding. Right? 9.7 million shares outstanding, 18.3 million shares outstanding today, right? So they issued equity to buy a Bitcoin, right? And so most people, most companies, when they issue equity, it's a bad thing, right? It's like, oh, wow, they're diluting investors. They're raising cash. This is a bad sign. They need money. They need financing. The stock price tanks. MicroStrategy and MicroStrategy investor base think the complete opposite, right? Because the MicroStrategy investors are interested in Bitcoin and Bitcoin per share metrics. So when MicroStrategy sells equity, right? When the market cap of MicroStrategy is trading above the value of its Bitcoin holdings, and they sell equity and they immediately plow that right into Bitcoin, Bitcoin per share for MicroStrategy goes up, right? And so here's a great website, mstr-tracker.com. Shout out to Lizard Wizard BTC and Cole Tenold on Twitter. They put together this fantastic site. I did a lot of this data internally, but not nearly as pretty, and I don't have my own fancy website. But so here's it says MSTR NAV multiplier and Bitcoin price. So a couple people they calculated out, what the NAV, quote unquote, is the value of the Bitcoin, right? And the NAV premium is the market cap relative to the value of the Bitcoin. So if we kind of, if this is all 2020, right, when MicroStrategy's market cap was, much, much larger than its Bitcoin holdings, after a while, right, MicroStrategy was basically the entire market cap was its Bitcoin holdings. And at one point, in the late 2020, the market cap was less than the value of its Bitcoin holdings, right, because it was underwater on its debt. So here's the MicroStrategy to Bitcoin ratio, right? There's basically almost no asset on the planet, or not no, I would say not say no, but few assets, securities, stocks have outperformed Bitcoin since 2020. MicroStrategy has greatly outperformed Bitcoin. And here's the Bitcoin per share, right? So when MicroStrategy issues equity, is it dilutive or is it not, right? This is a really, really important question and an important thing to understand. And this is, the last month, MicroStrategy has issued 2 more convertible notes to buy Bitcoin. They're priced at like 60 basis points, 0.6%, due in 2030, and I think 80 basis points due in 2031, right? Borrowed to combined, I think it was over $1 billion, due in 2030, so due in literally 6-7 years, and then both had kind of 40% conversion. 40% above the closing price of MicroStrategy stock that day was the convert strike price, meaning that similar to the 2021 or the 2020 convertible note issuance, convertible note that is now up 400%, right? There's obviously a massive demand for MicroStrategy convertible notes because it's one of the rare bonds out there that has Bitcoin exposure, right? And the key thing to understand is, as a bond investor, is we've already seen the rate shock, right? We've already seen interest rates on long bonds, on U.S. 30-year Treasury bonds go from 1% to 4 to 5%, right? We've already seen and if I'm a bond buyer and I buy a bond for $100 at a 1% interest rate for 30 years and it goes to 5%, my bond mark to market's worth $60, right? That's a 40% drawdown. That's a massive drawdown. So the interest rates have already repriced on bonds. I would say that's not the massive risk here. The massive risk for long-term bond investors is the dollar supply, the inflation rate, the debasement rate completely wrecks you. Meaning that, like, okay, you buy a 30-year bond, you lend money to the US government for 30 years. You're going to get your money back in 30 years, but it's not going to buy you anything. And that's the real dilemma for every investor in the planet right now is that calculus. The US has a massive amount of debt. We went over this in episode 1. I encourage people to watch that if they haven't already. It kind of outlines my broader thesis, but 130% debt to GDP in the US. I say the US, this is a global problem. The US is just kind of what I'm referring to. But that's default territory for a sovereign nation. It's 130% debt to GDP. Every nation ever that's hit that threshold has defaulted, besides modern day Japan and the US. And if you look at what's happening to modern day Japan, the currency is going in the gutter relative to the dollar. So what's the dollar going to do relative to a stronger currency, right? If you think the yen is collapsing or depreciating against the dollar, falling in value, well, what's the dollar falling in value against? Gold, Bitcoin, stocks. My denominator, my unit of account is Bitcoin. So this is a masterclass, right? We think speculative attack, the biggest story ever was Soros, borrowing for a short term, a couple weeks at a time, maybe even a couple days, short selling pounds, buying them back after exchange collapse. Saylor's speculative attacking, and maybe people don't like the speculative attack name. It sounds too hostile, too aggressive, right? But make no mistake, this is a speculative attack. It's long-dated fiat liabilities, Bitcoin assets, and there's an arbitrage there. Maybe some people requested I say speculative arbitrage. Okay, fine. But it's really important to understand, right? He's borrowing money at 1%, 0%, and buying Bitcoin with it. And it's laughable that no one can really understand what's happening. This is the biggest story. A $1.5 billion company is worth $30 billion. And the core business has changed nada. Nothing has changed. And I mean, it's MicroStrategy's in a unique position here because Saylor has, over 50% of the voting rights, so they can move, right? He had a vision, they execute. It's different when there's board members and there's no majority owner, right? And it's like there's a whole process here that has to happen at a public corporate level for this to happen. But if you don't think that this is a massive story, then keep your head in the sand, right? A lot of people said this guy's an idiot. He's borrowing money on a hyper speculative asset, right? Again, MicroStrategy's trading at $180 a share right now. It's like a 10x, more than a 10x from when they first started buying Bitcoin less than 4 years ago. And they've changed nothing about their business. So, and he's buying, and Saylor's buying at 69,000. He just bought another 10,000, 15,000 Bitcoin. They have more than 1% of the Bitcoin supply. So like try acquiring, say if you're a public company with $20 billion of cash, go try to get 210,000 Bitcoin. Go try. You're going to absolutely send the market to do this. And you're sure as hell not getting a $30,000 cost basis like MicroStrategy has. So again, like the fact that no one else is doing this, the fact that after 20 years of the meta in the stock market being borrow as much money as you can, buy back your shares, and someone comes in and says, nope, we're going to borrow money and buy a superior money. We're going to sell our equity. We're going to dilute our equity as much as we can and acquire the superior money. because that's the thing that has value, right? And right, they have access. MicroStrategy has access to the corporate bond markets and the corporate equity markets. They can sell equity. They can sell debt. I don't, right? I wish I could sell shares of my little irrelevant LLC and buy Bitcoin, but I'm not a public company, obviously. But people should be paying attention here because this is a massive story. So did I get to everything here? I think I got to everything. But if you're not paying attention to this, you probably should be. And not to say buy MicroStrategy or not, right? Buy Bitcoin. You should own Bitcoin. You should own it in cold storage. But if you don't think that this is a tectonic shift in the financial landscape, if you don't understand that dollars are created through lending and destroyed through repayment or default, and the whole basis of the entire fiat system is credit expansion, credit extension, if you don't understand that every single dollar in circulation was lent into existence, and commercial banks lending money expands the money supply, creates money. If you don't understand, creates currency rather. If you don't understand this, you don't understand how 21 million Bitcoin is enforced, how consensus works, and what someone on a scale of billions and billions of dollars borrowing money for free to acquire an absolutely scarce asset with a ever rising production cost means, you should look into it because this is the biggest story in finance. Bitcoin's the new stock buyback. It is. Said it 4 years ago. Say it again. Disclosure, I guess a little late. I own some MicroStrategy in a retirement account. Not as much as I should. Not as much as I should. But yeah, this is for anyone that hasn't followed, I guess, again, this is a great article. You should read it. Speculative attack. This was written literally a decade ago. And this is an important thing. And so this is talking about theory, right? You're going to have large financiers come in and borrow money. Businesses and financial institutions borrowing their local currency to buy Bitcoins. Is that the Bitcoin price in that currency would go up relative to other currencies, right? So this was hypothetical. This was theoretical. Nope, not anymore. It's happening. Silvergate. Silvergate was a Fed member bank, and they collapsed in 2023, not because of their Bitcoin exposure, but because they had they actually had their entire balance sheet in treasury bonds, and they had a run on their deposits. But Silvergate was a Fed member bank, and MicroStrategy and Marathon executed over-collateralized Bitcoin loans with Silvergate. So a Fed member bank lent money against Bitcoin, right? Like, that already happened. The precedent's been set. And if you don't think it's going to happen again, okay, believe what you want. But this has big implications, right? The Fed last Wednesday, Jerome Powell basically gave up on the fight of inflation. There's a reacceleration on a 1 and 3 month time frames of inflation, right? That 2% in year-over-year inflation target's long been their kind of target. And look at, here's sticky CPI, 3 month annualized, ticking back up, and the Fed says, yeah, we're still going to cut rates at the end of the year, right? This is an admission that there is no way out. The fiscal situation in the United States, and I've said this before, in 2023, I was too bearish. I'll own that for sure, right? And I didn't expect record fiscal deficits in peacetime. Record fiscal deficits. And so they are running this Ponzi, to infinity. They are going to continue to pump money into the system. They're going to pump currency into the system and pretend that this is economic growth and prosperity, and all it is more units of currency entering the system. And so, savvy market participants are insulating themselves by buying Bitcoin, and the more daring and advantageous ones are shorting dollars, because that's how really every wealthy person that's what every wealthy person does. That's real estate investing, right? A lot of real estate investors think they're a genius, especially the last 40 years, because real estate only goes up, right? Borrow money, buy real estate, interest rates get lowered, refinance, pull your accumulated principal out of the property, buy more properties, lever up. Anytime things get hairy, the Fed cuts rates, pumps money into the system. I mean, that's shorting the dollar. I don't know if dollar liabilities are short selling dollars. You're borrowing money, you're putting it into another asset, and you're paying it down later when the dollar is worth less. So there's already a precedent for this. I mean, this is like the basis of investing. Bitcoin just has a volatile exchange rate, so people think it's scary, right? And it is, right? You shouldn't leverage trade Bitcoin futures with a massive amount of your wealth. You shouldn't mark to market your entire Bitcoin stack, right? Where if it draws down 50%, you have to sell everything. But in the case that you have a public company you wholly control and can borrow money for free for 7 years, doing that and buying Bitcoin is a pretty fantastic strategy. So, I commend Saylor. This was theoretical, and now it's not. So the FASB accounting rule change, because for those that aren't familiar, MicroStrategy, when they did this, and still to this day, Bitcoin's treated as an intangible asset on the balance sheet, not a cash equivalent. And the FASB accounting rule change is coming to effect in 2025. And I think you'll be able to access that rule change this year with the right filings. And don't quote me on that, but meaning for any corporate treasurer, you'll be able to treat Bitcoin as a cash equivalent. And the reason that it sucks as an intangible asset is that when the price falls, you have to mark to market those losses. But when the price of Bitcoin rises, you can't mark to market the gains. So Saylor was willing to eat the negative earnings per share, right? The gap accounting. It didn't matter. He knew that he wasn't selling the Bitcoin. He knew that there was no loss being realized, but on the accounting balance sheet, technically there was a loss. Who cares? The stock's up more than 10x. So that's the rundown. That's what I would say the biggest story in corporate finance is. I said this on CNBC at the beginning of the year. Price is at $600. It's 3x since. Funny enough, I said it on CNBC. They were asking me about what I thought of Saylor and the ETFs, and I said, this is the biggest story in corporate finance, and was interrupted. And she goes, well, and no slight at the host. I get it. Not everyone's as tuned into this stuff and is just trying to figure this out. Totally no slight to the host. But she goes, well, if the Bitcoin ETF's approved, what do you think happens with all the altcoins and other cryptos? And I was like, whew, completely missing the point here. Whatever. So, I've been going for 37 minutes. I think that's good. I think that's enough for today. Again, please, if you're on YouTube, like, subscribe. It would mean a lot to me. If you're on X, give it a like. A share would mean a lot to me. Pick holes through my thought process, my theses. Call me an idiot. Say this is the top. That's all feedback, criticism, comments. It's all welcome. I'm just putting my ideas out there in the open and looking for feedback, no matter positive or negative. So we'll wrap it here, and we'll come back shortly with some more content. And also, I'm just ripping this one shot straight through, but we'll with a little bit more traction, a few more episodes in, and maybe a few more views and subs, we'll get an editor. We'll start doing some thumbnails. I'm not going to be a full-time YouTuber, but if this starts to get a little bit of traction, we'll hire some help and polish this up a bit. Maybe get on the podcast feeds too. But yeah, cool. Appreciate it. Talk soon. Peace.